What is going on, everybody? Welcome back to another video, and I'm sure you've already seen this title. Today we're going to talk about something a little bit different. Which one's better, growth dividends or income dividends, and which one you should be trying to do? Which one suits you best? With that being said, let's go ahead, cue the intro, and get into this video. I've been getting dirty money. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. What's going on, guys? So the growth one, this one I hear from everybody. I personally owned it before. J&J, Johnson & Johnson, they own a bunch of just consumer staples like soap and stuff like that you're going to always use. So this was the perfect example that I wanted to use. They've got great dividend growth. They're dividend king, I even believe. And then we're going to compare it to, and of course we're always going to use this portfolio visualizer so you guys to be able to analyze everything. And if you guys haven't used this, make sure you guys stay because I'm going to show you guys how to use this. But J&J, and we're going to go over this too. So I want to show you both sides of both of them. So J&J, here, get it to pull up here. You guys can tell I've looked at a ton of these. You're getting $1.06 every single quarter now is what it just changed it to. It was $1.01. You can see obviously they've had a great dividend growth rate, which is great for this company. But you're talking $162 a share. You have to remember that, and they've done very, very well, as in steadily inclining. As you can see, year to date, you're still up 4%, max overall. You've had nothing but a great equity curve on this stock. So it is a good company to invest in. I'm not going to say that it's not whatsoever. Now, though, we're going to go over to another stock, HRZN, which has been our monthly income king now, considering everything. And this is my new favorite stock that I've been buying up, and it's 10 cents every single month. It did have a 15 cent, which was a special dividend. But since then, though, it's been 10s, and you can see they do a special dividend every so often. I think it's like once a year is what it's normally. It was actually this month. You can see they were at 11 cents here for a little while. So that's not bad news whatsoever. And now they're only at 10, so that's okay. But they're consistently at 10, and that's the biggest thing. And then they have the special dividend. So this amount right here is actually going to change. For the newest one, it'll actually be 15 cents total, or it'll be 10 and a 5 cent one, and you'll see that it'll be in the same month. So we just want to compare these two. So what you're going to do is I compare everything to the S&P 500 because that is the staple of the stock market. So we're going to put 100% allocation. Again, $1,000 is what we're starting with because that's what most Americans have. And then $500 because that is the monthly car payment that is the average car payment in America. Now, some of you may have less, some of you may have more. But if we just click Analyze Profile after this, after you fill all that in, and you're going to get this chart. So it's going to actually go since 2011. So say you started in 2011, and this is what it is. And yes, you're putting $500 into it every month. You're going to see that you're actually going to get, J&J is actually going to start out really, really well. And it's going to continue to go, and it stays pretty close with the S&P. So again, not a bad stock whatsoever. HRZN does dip off, of course, during COVID. Everything does. So this is like a little blimp right here that you're not even really, you care about, of course, but it's not the biggest thing in the world. But then all of a sudden, J&J is tapering off. HRZN, right as of right now, is holding with the S&P 500, which is a big thing for me. And the other thing is your overall money. So HRZN, you're about $8,000 short from the S&P, which is right here. J&J, you're only at $135,000. See, to me, that's a little worrisome. Now, if HRZN was the other way around and they had a little bit less, but you were getting more income, maybe I can justify that. Because I am getting income, I'm having that trade-off of income versus just overall growth in that stock. But as you can see, HRZN's actually growth is really, really well, including compounding, and then as well as you're going to get this monthly income. So then when we come down here, we're going to come down here and you can see the income. So last year you would have made just over $10,000 in income, and then this year you would have made about $8,500 so far. Again, the year is not over, so just remember that as well. Year's not over at all, so you're going to end up making more. You get a couple months left plus a special dividend, which is good. So obviously this is going to go up year after year after year, which is always a great thing. Your first year, yeah, you may have only made a little under $400, but you're still able to do that consistently. That's what matters to me. So you have to be able to choose where you're going to do this. So whether or not you're looking at a J&J or a HRZN, and you guys got to remember, I've said this for a long time. It's not just about if you log into one of these, it takes you to the yearly of 48%, which is great, or the yearly of 32%, which is great for HRZN. It really is. We're not going to act like it's not. But we're also going to go over here and we're going to look at the max overall. So what I don't like about the max is that it does continue to downtrend there for a little while during 2013, 2015 when the market didn't do absolutely great. What I do like about it is that it's not taking giant swings like J&J, considering how much J&J costs. Instead, you're getting this it's staying between about $12 to $15, and you're able to continue to buy large chunks of shares, continue to make money off of it, and then on top of all of that, you are now getting the growth. You're technically getting growth right now with this stock just because of how low it went during COVID. And you're getting it's pushing up towards highs, and more people, this is what people don't realize, is more and more people are getting into the dividend investing and wanting that monthly income. So I do think that stocks like HRZN are becoming more and more popular, and you're going to be able to make more money off of it. Now, is that 100% true? I don't know, because I can't predict the future. I do know that I put my money into monthly dividend stocks, and I also put my money into growth stocks. But instead of buying J&J, I buy the S&P 500, which is SPY, because again, it consistently goes up, and I love it. I mean, I'm never going to complain whatsoever about how my portfolio has done when I choose the income mainly over the growth. I'm not really looking for that growth at this point. I'm looking for more of that compounding and stuff like that. So again, if you are a new trader, and again, I'm not a financial advisor whatsoever, if you are a new trader, I would be looking for something in between. So you can buy some shares of Horizon, you can buy some shares of PTY, you can buy some shares of QYOD, things like that you research on here, and then also still be buying the S&P 500 if you want to do it 50-50, you want to do it 70-30, whatever you want to do on that. Just make sure you create a plan, stick to it, and continue. Now, you can adapt as the market, for instance, and this is a good point to bring up here at the end of this video. If you've made it, you're going to get an extra nugget of knowledge. When you see that the market is continually to go down and nothing but bad news is coming out, and you think it's going to continue to go down, maybe stop buying SPY until you find that good place to go and buy on the downside. But again, buy it on the downside. Don't just keep buying it at all-time highs. I only buy SPY on red days. And again, that's my strategy. Maybe the dollar averaging doesn't work out there, but again, that's what I like to do. It's how it works mentally for me. With that being said, guys, thank you guys for all the likes and support that I've had on this channel. If you need anything, please leave a comment below. I do believe if you guys want to see AT&T in the next video, let me know. I have a couple people asking for that one, and I will do a review on that. I'll see you guys in the next one.